All right, Oracle just dropped its latest earnings report and Wall Street just went crazy. Okay, we have to look at how crazy the stock actually went up, not because of some simple small revenue beat, a miss, some guidance. No, no, no. We have to talk about one massive number today, and it's going to be backlogs, RPO. Now let's break down why Oracle is suddenly this huge AI infrastructure darling of this current market. Now, let's get some of the numbers out of the way. All right, so Oracle posted a $14.9 billion in revenue for the quarter one fiscal 2026. It's up about 12% year over year. The cloud revenue, which is your SaaS plus infrastructure, got about $7.2 billion, growing at about 28% year over year. OCI, which is the Oracle's infrastructure cloud, went up by about 55% to the $3.3 billion. Pretty good, right? EPS came in at a clean $1.47 non-GAAP. So generally speaking, just looking at the numbers itself, it is a very, very decent report, but nothing would warrant it to go up by 45%. So in the intraday, when it first dropped, it went up by about 36%. Right now, it kind of dropped significantly. Well, I won't say significantly, but it kind of dropped a little bit, right? But I do want to talk a little bit more about how you really want to see the backlog. Right, now let's talk about Oracle's remaining performance obligation. That's the RPO. So basically, you're talking about your future booked revenue. That actually skyrocketed up to about $455 billion. This is up 359% year over year. This is effectively 3 times more than whatever Oracle has as an annual revenue. Now, of course, there's downside to it, which I'll get into a little bit later on. But generally speaking, what's actually driving this whole entire AI Oracle move, right? Because all your humongous AI players are getting into contracts with Oracle. Your customers like OpenAI, xAI, Meta, NVIDIA, AMD, all of them basically need this pre-booking cloud capacity. And Oracle is there to service them for sure. And let's be honest, right? We also have the whole scarce GPU compute, which is the big name of the game. So now you basically add that into Oracle's partnership with AWS, Microsoft, Google to basically distribute all these databases. Now this is not really a catch-up story anymore, right? This suddenly is turning out to be this hyper-growth AI infrastructure story. Now, the market is, of course, hype about this whole entire thing because people like visibility, right? Investors like us, we want to be certain of something. We don't want to be certain of hype because you might be hyped about a certain company, you might be excited, you might want to spend money, but you are not spending money just yet. But with this RPO, these are basically signed contracts, right? Oracle basically guided the OCI to grow 77% this year to about $18 billion. And they actually expect it to go as high as $144 billion by 2030. So of course, this backlog kind of makes the roadmap a little bit less than ambitious because it is now possible. So Oracle's multi-cloud strategy is of course exploding. Of course, the revenue is also tied down to AWS, Azure, and Google databases. All this kind of grew up by 1,500% year on year. So talk about a crazy adoption curve for the cloud strategy. Now, I do want to talk about some risk because clearly when Oracle went up all the way to $345, people were pretty hyped about it. Right now, Oracle sitting at about $292. So, of course, let's talk about risk. Execution matters, right? Because today you're talking about Oracle having the signed contracts, but we are still not talking about the actual execution. Oracle would need to build multiple data centers. Right now, they are already up by 100% on their data centers for the year. They will have to build way more data centers. They have to secure more GPU, which is needing to be a bigger client of NVIDIA and AMD. They have to turn those backlogs into actual revenue. So they have to turn all these contracts that they have to sign, which is 4 of these main contracts, right? They have to turn these contracts into actual revenue. Right now, they are just basically a piece of paper. They have not actually gone through the process of finalizing the entire thing. They just confirm that the customer wants to buy it, but they have not gone through the fulfillment of it, right? So that's where the problem kind of lies. It's a good problem to have, let's be honest. All businesses wants to have this problem. I want to have a fulfillment problem. Okay, a lot of people generally would have problem with their sales incoming. Fulfillment generally is pretty easy to solve, but generally you need to put a lot of money into it. And this also kind of brings in for macroeconomics, because with the Federal Reserve coming out with the FOMC pretty soon, which is gonna come out next week, everyone is expecting the Feds to cut by 25 basis points. So of course, the more basis point is being cut by the Feds, the happier Oracle is going to be, because they are definitely servicing their debt at the lowest possible decimal, because they want to borrow a lot of money. They need a lot of money. They are actually more of a rate sensitive company than a lot of different other companies, right? So now, the next thing that I have to worry about, which is CapEx and OpEx. I talked a lot about this on my channel and also in Instagram when people ask me on my channel, on my Instagram stories. If you're not following me on Instagram, down below. But anyway, people usually ask me about CapEx and OpEx, and I talked about the risk about CapEx and OpEx. I believe in the next 2 to 8 years, there will be a significantly important company that would collapse due to the over expenditure on CapEx and or OpEx. The reason being is that, for example, if you look at Meta, in 2022, they had a huge nosedive. One thing is because of inflation, another was because of rising rates. Thirdly was because of CapEx. They were spending a lot on CapEx for them to do the whole goggle thing, right? The whole VR thing. They're still spending a lot on Meta Labs right now. Even until now, they're still spending money. Just a lot. Right now, it's just significantly lesser. But back then, they were still spending a lot of money. Right now, Meta is going back again, right? They're going back to spending more money again. But this time on OpEx, which is them aggressively hiring from OpenAI, from Apple, from Microsoft, whoever it is. They are giving out signing contracts like NBA contracts, right? You saw the OpenAI contracts for this one guy that was getting 100 mil signing bonus. Like, it was absolutely crazy. But yeah, understandably, like, Meta wants to aggressively grow, and I can completely see where Zucks is thinking from. So my only concern is that if your CapEx spike and your OpEx spike for Oracle, the free cash flow is going to look real messy in the short term. So in the next 2 to 3 quarters, for a fact that people are going to be looking up the earnings report and just be like, oh my God, why is the free cash flow in the negative? Why is it 2 times in the negative? Why is it 3 times in the negative? Because they are trying to fulfill those backlogs. But people might not understand it from the next earnings report onwards, right? Because people are generally always looking forward. People are not looking backwards. People are always looking at this quarter, thinking about the next quarter. That's the whole point of investors. Investors are greedy, okay? Let's just be honest about it. And of course, let's not forget the most important part, which is that Oracle is not a monopoly. They still have proper competition from AWS and Azure. So the rivals are not going anywhere, which means that Oracle is not exactly in the best position. But I'm not going to lie, the backlogs definitely changed my mind about Oracle. So honestly, right now, I think the market just sees Oracle as this company with a lot of booked AI demand and a very credible path to massive cloud scaling. So, of course, the question begs, which is, do investors buy in now, chase the stock after this huge run-up? I think that kind of depends on your view, but I don't want to kind of cop out on that answer, because personally, I think that I would want to give my best answer, kind of give you guys my opinion. Of course, not financial advice. This is just for entertainment, okay? Are you not entertained? Anyway, I do think that Oracle, with the backlog, it kind of changed my understanding for the company. I like the problem that they have. It's a good problem to have. And of course, with the amount of people who is buying into the stock, my only concern from here on out is only 2 things, right? First of all, is my own investing philosophy. I do not invest in companies that have more than 70 PE ratio. Now let's look at Oracle. Hold on, let me check. Okay, well, it's at 67 now because it dropped so much, but previously it was at 79. So technically, I can get into Oracle. Okay, but the second thing is that what I'm worried about is not Larry Ellison because he's the chairman, not the CEO. But what I'm afraid of is that the CEO would start to create financial instrument to change the stock into deliverables where they can actually siphon the money out to help them with the fulfillment. That's where I'm worried about. I'm worried that they give out stock, they dilute the stock so that they can get more money, more capital for them to spend on fulfillment. I don't think they would, but it is a possibility, especially for Oracle. This is effectively the best day that they had since the dot-com boom in 1999. They have never had such a day before. I've been looking at Oracle on and off for about a good 3 years. I've never seen Oracle had this insane of a day. Even when everything went like 30% parabolic upwards, Oracle's went up like 9%, right? So, of course, this is spectacular news for Oracle, but if you ask me if I'm ready to invest all into Oracle, I don't think so, but I am very interested in creating a position in Oracle now. I think if Oracle were to go down to about 280 would be a really, really interesting position for me to look at. So let me know what you think down in the comment section down below. If you think Oracle is going to be the next big winner, or do you think that everyone is just getting ahead of their self and you think that everyone is crazy, the bubble is going to burst, things of that nature. I don't know. But from my point of view, I think, I've been talking about how the AI bubble is a bubble, it's a bubble, it's a bubble, it's a bubble. I've been talking about it since 2023, right? I didn't call it a bubble in 2023, but in 2025, I called it a bubble multiple times, and the bubble kept on expanding. But looking at what Oracle is doing now, I feel that the bubble is not going to pop anytime soon. Because looking at the amount of contracts that all those AI players are getting from Oracle, and Oracle is also getting resources from those big AI players, it's kind of like an Ouroboros kind of effect, right? If NVIDIA is buying the cloud capacity from Oracle and then Oracle is buying the GPUs from NVIDIA in order for them to continue this whole entire sequence, and that kind of just creates more of a cycle and everyone just basically pays the price for it. Eventually there's going to be somewhat of an inflation, some kind of a bubble, but I feel that if Oracle somehow miraculously get to 280, I'll be very interested to add a position into Oracle. So yeah. Anyway, that's all I have for this video. If you enjoy this kind of content, like, subscribe, and drop a comment down below. See you guys in the next one. Peace out.